Group, where securities are offered through Money Block, and a proud contributor to MarketStream.live with your Tech Talk on 10/26. Now, the stock market, as we have noted all day, started weak today, weighed down again. Taking a look at it, the underperformance of Apple. Now, it has come off its worst levels down in that 113, 114 range, right around that 115 range, still down about 2.7%. And again, that's after its underwhelming fiscal fourth quarter results and taking a look at its fiscal first quarter guidance. It's now challenging that 50-day moving average right around that 112 level. So we want to keep an eye on that. That's midterm support. If you are looking for a support level that could get some further catalyst to the downside, watch that 50-day moving average right around that 112 level. Now, the market did get a boost, though. As a matter of fact, this morning we were talking about some of the reports that were going to be coming out, and highlighted one from the American Petroleum Institute, which said that there was a 4.8 million barrel build in crude inventories. Now, soon after that, we had a mixed result from the Department of Energy, which actually said that there was about a 500,000 or roughly 550,000 barrel drawdown. So that defied the bearishness that we saw in crude oil earlier. Crude oil subsequently bounced. We also saw that the market tried to bounce. That was right around 10:30 Eastern. That we saw the market try to get some momentum to the upside. Now, technically, when you look at the futures contract in crude, the 50-day moving average is right around 48.27. So we didn't actually challenge that on the low end today when we saw that crude was challenged, but it is a level that we want to keep an eye on to see if the bears start to get some momentum, especially if we continue to see maybe some mixed results. I mean, the results that we saw in the inventories reports, it shows that their counts are still way off, but that's for another day. Now, some people, there's been a lot of talking heads out there. I've been hearing one of the main reasons or catalysts that the markets are back on the defensive is that there was a report out from Bloomberg that basically showed a poll that Mr. Trump was ahead in the standings in Florida against Mrs. Clinton. And that's a key battleground state. Now, you're going to see a lot of these pundits come out, but the one thing that I want to talk about is that poll has been out since about 5 o'clock this morning Eastern Standard Time. I did not talk about it on my earlier segments because I don't put a lot of weight in those polls. I think there's too much fungibility right now in any of those polls. So I really can't say that had any impact really on the trade today. I'm just looking at what came out fundamentally both in the oil markets. We saw what came out on earnings announcements with Apple. And I think what really the market was buying was not so much the poll results, because to be quite honest with you, if in fact we did see that the poll results were coming in favor in the state of Florida for Mr. Trump, we would have probably seen a bounce in sectors like biotech. As a matter of fact, if you looked at the ETF IBB, which is the NASDAQ biotech ETF, it's down about 0.3%. If in fact Mr. Trump was getting some traction, that would be a positive for this sector, because Mrs. Clinton, she has some regulatory components that might put some pressure on these stocks going forward, as well as her stances on just universal health care, the Obamacare stance. Right now I'm taking a look at the IBB, and it's below its 50-day moving average of 284. So now we're looking at midterm resistance at 284. And with it trading at 264, it's below its 200-day moving average. So we need to get it over 273 to see that it gets over its long-term support. So there's a lot of work that has to be done here, and I did not see any bullish activity in IBB with that headline. So be very careful when you start seeing these political polls. But what could be the catalyst for driving the market lower is going to be watching the oil markets. The inability for oil prices, which are right now right around that 49 and some change level, down about 1.6% right now, is their ability to sustain any gains, especially after the inventory data that we saw from the EIA. That's the one that I watched most closely. That's the one that said that there was actually a draw of about 500,000 barrels. I'm a little bit concerned that we can't get over that 50-day level. The 20-day moving average, which is more of a shorter term moving average, is around 50.26. We want to see some momentum over that moving average. That's resistance right now. On the D's crude contract, we want to see crude get over 50.26. We could see some momentum to challenging some upside. Otherwise, you could see that we're going to get some choppy action here. The other thing is that I'm taking a look at the longer term end of the Treasury curve, and I saw that the 10 years. Now, the 10 years have been trading. We actually saw that the yield went up about 3 basis points to 179. Taking a look at the 10-year chart for December futures, the 10-year right now is trading right around, I'd say 130. It's actually below the 130 level. And the 50-day moving average, which is that resistance, is 130.65. If that price action continues to drop down and not challenge that 50-day moving average, you could see yields start to ramp up even more, especially if we start getting some more talk out of Europe. The continued overhang on Apple, I'm watching this, and otherwise lackluster response to the broad market good news. You've seen a lot of good earnings reports from a bunch of other companies. Basically is giving you a character trait right now, technically, of the market where it's looking a little bit, let's say, volatile or uncertain. As a matter of fact, if you look at the U.S. dollar index, it's trading right around that 98.60 level, down about 0.1%. It's pairing its losses that we saw earlier in the session. Strength in the dollar, that's not going to be a positive both in the commodity markets, and it's going to be a challenge in the equity markets going forward. So we want to see if the dollar strength continues. Some other things that we're seeing some defensive nature building up in the markets is volatility. As a matter of fact, we've seen the volatility index up as much as 8% today at 1464, up about $1.18. That's above its 50-day moving average. As a matter of fact, it just pierced through that today. So now we're looking at the 50-day moving average. If it can settle above the volatility index, the VIX, settle above 1381, that could be some, that right now is, then could be established as support, and we could see some more defensive nature build. The other thing, and the last thing that I want to point out from both a fundamental and technical nature is that small caps. Their underperformance is notable at this juncture, and these are domestically orientated stocks that are represented in the small caps. I've talked about this over the years as my canary in the coal mine type of index and sector, and it's down as much as about 0.9%, excuse me, and about 3.7% this month. It's below its 50-day moving average, which is now midterm resistance at around 1237, but it's above its 200-day moving average, excuse me, of 1144. That has me a little verklempt. So we see that it has supported 1144 on the small caps, but we need to get the resistance level of 1237 broken before you're going to start to be seeing some sustained bullish upside on the domestically centric small caps. So keep an eye on those earnings of the small caps and specifically this sector ETF. All right, folks, that's it for Tech Talk. Next time I'm going to be on, we will be talking about the market close. See you then. Till now, have a great rest of the trading day, and we'll talk to you soon.